The U.S. Commodity Futures Trading Commission is holding a public meeting today in Washington, D.C. to discuss the role of speculators in the metals markets. We're joined right now by Bart Chilton. He is the commissioner of the CFTC. Bart, so glad to have you with us this morning. Thanks for the time. So today is a big day. I mean, you had the big energy meeting back in January. Today, it's mostly about silver and gold. Some market analysts suggest that the CFTC should back off from making position limits, sort of side with the CME. What's your take?
Well, I mean, if we've learned anything from the recent financial fiasco, I think it's that the status quo ante was not good enough, and we need to do more. So I think the exchanges all want free, fair markets, and it's our job to actually prevent and deter the possibility of manipulation. And there are many analysts who say that the markets have been manipulated. The jury's still out on that. But I think sensible position limits, Deirdre, that aren't too stringent, but at least put a cap so that there can't be a large concentration that could lead to manipulation is something that a wise regulator would put in place, and I hope we do.
Bart, I'm just curious, do you expect to hear from the crowd at all? I mean, are there going to be people there that talk about how their businesses were ruined or their personal fortunes or both because of speculation, because it was left unregulated?
Yeah, I think there are a lot of folks in the metals industry. There are individual investors who've lost some money. Look, in the futures game, people win, people lose at the exact same time. So, you know, that's the risk that folks take. But many people have put some of their savings, their retirements in metals, and they've lost some money. But the general concept of these markets, Deirdre, is that they can be used as a risk management tool. And over the last several years, so many speculative interests have come into the market. And look, we love speculators. You don't have a market without them. But there's been so much, $200 billion in 5 years, that I think they're contorting the market to some extent and causing increased volatility. And we just want to make sure that we're protecting consumers.
You know, we've heard from a lot of traders, as you mentioned in the past, a lot of individuals saying they've lost money. The CFTC itself has come out and sort of said, okay, we've looked into specific trades and we've come to the conclusion that speculation was not the problem. I mean, how do you look into those things? How are you sure?
Well, I'm not sure that you can find economists on both sides of this. I mean, Rice University, Princeton University, Lincoln University, Missouri, and others have all said that speculators had an impact. But under the law, Deirdre, it's our charge to prevent and deter manipulation. And so one of the things we can do is ensure that there's not such an enormous concentration of positions that could lead to manipulation, either intended or unintended. Again, our goal is to protect these markets and make sure they're free and fair, but most of all, to ensure that consumers are being traded fairly.
And we also want to mention just the size of what you oversee, Bart. I mean, it's a $5 trillion market.
It's a huge market, Deirdre, but one of our other blind spots and position limits, like we're talking about today, is something that we can do. We have the authority. We just need the will to do it. But there are a couple of blind spots that we have, and we've talked about it before. That's the over-the-counter market, which is much larger than what we see on the regulated exchanges. And the over-the-counter market can impact prices on the regulated exchanges. And after all, that's where the prices are determined that affect people. Things like a loaf of bread or a gallon of gasoline or a home mortgage. So we need to keep our eye on the ball here.
Bart, we thank you. Good luck today. Bart Chilton, CFTC Commissioner.